Okay, so you're here because you want to get a real grasp on the intro to Indian accounting standards, but with that CA final exam squarely in your sights, right?
Yeah, think of this as our strategy session before you even open those books.
We're not just going to lay out the info, we're dissecting it like where are those examiners going to try and trip us up? You know, what are they looking for?
Exactly. We're going deep into the source material, but like reverse engineering it. How does this turn into an MCQ? What kind of scenario are they going to cook up from this section? We're all about those aha moments where you connect the dots in a way that'll get you exam ready.
All right, so first things first, we got to talk about accounting standards, period.
The building blocks, right?
The module calls them the essential building block of financial reporting, which, yeah, sounds super important.
Yeah.
But for exam purposes, why? What kind of question hinges on this whole idea?
Well, think about it. They could ask you, like, why even have standardized accounting?
Right, why not just let everyone do their own thing?
Exactly. And the answer is all about those objectives, right? Accuracy, consistency, comparability.
Oh, so if financial statements aren't comparable, they're basically useless for making decisions.
Bingo. That's the core concept here. And it'll come up in broader questions, too, not just about the standards themselves.
Got it. So even if a question is about like limitations of financial statements or the need for regulation, we can tie it back to those objectives.
100%.
The module mentions the ASB of ICAI since 1977. Is that just historical trivia, or could it be relevant for the exam?
It's more like context. You probably won't get quizzed on dates, but knowing the ASB has this history shows how accounting practices in India have evolved. It's not like Ind AS appeared out of nowhere, right?
Yeah, there's a whole story there.
And that story could help you understand why certain standards exist, how the framework developed. It's all connected.
Speaking of connected, the process of setting these standards is like a whole journey.
Oh, yeah, it's not simple.
ASB drafts, public feedback, NFRA, then MCA notification for companies. That screams procedural question to me, like put these steps in order or something.
Oh, for sure. That's classic exam material. And it shows you understand the different stages, who's involved, how standards get their authority. It's not just the ASB deciding on a whim. There's a whole system.
Oh, checks and balances, all that.
Right. So if a question touches on like credibility or due process, that background knowledge helps.
Now, before Ind AS, we had the old accounting standards. What were their limitations? Because this feels like a big explain why question waiting to happen.
You're getting it. The module talks about how the business world got so complex the old AS couldn't keep up.
Right, like stuff they never even imagined back then.
Exactly. Think about like sophisticated financial instruments, derivatives, group restructurings.
And the whole digital economy explosion with business models that didn't exist before.
Exactly. The old standards just weren't equipped to handle all that. So you might get a scenario about, say, a company dealing with complex derivatives, and they'll ask why Ind AS is a better fit.
So it's not just about being newer. It's about being better suited to how business works today.
Precisely.
The module also mentions things like stock-based compensation, complex tax provisions, different approaches to shareholder returns, all stuff where a lack of standard guidance would be a mess.
Oh, yeah, you'd have inconsistencies all over the place, no comparability, which defeats the purpose of having standards in the first place.
Right. And what about disclosures? I feel like that's always a big exam topic.
Huge. And the old AS had limited disclosure requirements, especially around things like revenue recognition, related party transactions.
Segment reporting, business combinations, all those are key.
Exactly. And Ind AS generally requires more disclosure. So if you see a comparison question, that's a big clue. The module even gives us some examples from the old AS issued as of February 2002.
Do we need to memorize the whole list?
Nah, but being familiar with a few, like AS1, AS2, AS3, and their broad areas helps you see the progression, you know?
Okay, good to know. So India wasn't the only one feeling this need for better standards. There was a global push happening too.
Oh, yeah, big time. And that's important to understand because it explains why India ultimately went with IFRS.
Okay, so walk me through that global story. How does it tie into exam questions?
Well, first you have the IASC, right? Formed way back, then evolving into the IASB under the IFRS Foundation.
IFRS, the big name.
Right. And their goal was to harmonize financial reporting globally. Why? Because economies are interconnected, investors need to compare companies across borders. It all had to make sense on a global scale.
So you might get a question about the benefits of global standards or what pressures led to them being developed.
Definitely. And the role of organizations like IOSCO and the EU is key here, too. Their endorsement and even mandating of IFRS gave it serious weight.
It became the gold standard, basically.
Pretty much. And that's why India couldn't just stick with its old system if they wanted to attract international investment, play on the global stage.
They had to adapt.
Exactly. And that's where the whole convergence versus adoption thing comes in.
Ah, yes, the module makes a big deal about that. Seems like a prime spot for those tricky MCQs. So what's the difference, and why did India go the convergence route?
Okay, so adoption means taking IFRS as is, no changes.
Just plug and play.
Exactly. But convergence, which is what India did, means aligning with IFRS but allowing for some differences.
Like tweaks to fit the Indian context.
Right, they call them carve-outs. It's about balancing global comparability with what works locally. And because of that, entities using Ind AS can't claim full IFRS compliance. That's a really important point. They love to test that.
So knowing the difference between those two words is key.
It's not just semantics, it's a policy choice with real implications. And the module gives examples, like Canada adopted IFRS while India converged.
Okay, so there are different approaches out there.
Yeah.
This helps solidify the difference for me.
Good. It shows that India made a conscious decision to converge, to keep some level of control over its standards while still moving towards global alignment.
Got it. Now, how about the Ind AS journey in India itself? The module outlines this whole process.
It's similar to how the old AS was done, but with the NFRA playing a bigger role now.
Ah, right. Another layer of oversight.
Exactly. So the ASB of IKI still drafts the standards, but then it goes to the NFRA for review before the government, the MCA, notifies them. It's all under the Companies Act.
So this whole process, from draft to notification, feels like a potential sequencing question.
Oh, 100%. They could ask you to put the steps in order or maybe identify who's responsible at each stage.
And the timeline itself is interesting. There's that 2011 roadmap, then the suspension, then finally the 2015 notification.
Yeah, it wasn't a straight line.
Shows you how complex these big changes are in the real world, right?
Yeah.
You can't just snap your fingers and switch accounting standards overnight.
For sure. And throughout this whole journey, the module keeps coming back to the goals of Ind AS, right? Better insights, transparency, global comparability. That's the driving force behind all this effort.
Makes sense. Okay, now let's dive into the specifics of Ind AS. How is it all organized? What are the key features we need to know for the exam?
Well, the numbering system is pretty close to IFRS, which makes it easier to cross-reference.
So they retain the IAS numbers where applicable.
Yep. And for those based on IFRS, they use the 100-plus series. That structural similarity is something they might test you on. Also important is the inclusion of those IFRS and SEC interpretations, right?
As appendices.
Right. But here's the thing. They mention specific differences in the number of standards and interpretations between IFRS and Ind AS as of November 4, 2024. Like certain things are excluded, and there's that unique Appendix C to Ind AS 103.
So we can't just assume Ind AS is a carbon copy of IFRS. We got to know the specific differences.
Exactly. Those details are prime MCQ material. They could ask you a very specific question about which standard is excluded or what that Appendix C is all about.
All right, so pay attention to the fine print.
Always. And then there's the structure of the standards themselves. Each one has that same format. Objectives, scope, definitions.
Content disclosure, transitional provisions, appendices. Yeah, I see it in the module.
Knowing that template helps you navigate the standards during the exam. Like if a question asks about measurement, you know where to look within the standard.
Time saver. Right.
Absolutely. And don't forget, bold text for principles, plain text for application guidance, both have equal authority.
Okay, so no skimming over the plain text. Got it. Now, this next part feels like a minefield of potential exam questions. The roadmap for applicability. It's all about entity type, net worth, different phases.
Yeah, it's layered.
So let's break it down, starting with listed entities. What are the key thresholds and dates we need to remember?
Okay, so Phase I kicked in on April 1st, 2016 for listed companies and those in the process of listing with a net worth of 500 crore or more. Then Phase Ticket came on April 1st, 2017 for those below that net worth. And this applies to their holding, subsidiary, JV, associate companies too.
Okay, so group companies are caught in the net too.
Right. But companies listed on SME exchanges are excluded. That's an important detail to remember.
So different rules for different stock exchanges.
Exactly. Now, for unlisted entities, it's similar but with different thresholds. Phase I also started on April 1st, 2016 for those with a net worth of 500 crore or more. Phase 2 started on April 1st, 2017 for those with 250 crore or more but less than 500 crore. And again,
the holding subsidiary Jave associate rule applies.
So those thresholds, listed versus unlisted, those are easy points to get tripped up on in a scenario question.
Oh, yeah, for sure. And then you have the transition requirements. They need 1 year of comparative IND AS financials, which pushes back the effective date. So if a company adopted in, say, 20X4 or 20X5, they'd need comparatives for 20X3, 20X4, making the transition date April 1st, 20X3.
Exactly like that example in the module. They love to test that concept. And once IND AS is applied, voluntarily or mandatorily, it's got to be followed consistently. No going back.
Okay, so once you're in, you're in. And this also extends to those Indian group companies, right?
Right. If one entity meets the criteria, the whole gang's in. But overseas group companies, that's treated differently.
So a standalone overseas company might follow local rules, but if the parent's in India, the consolidated statement's got to be IND AS.
Exactly. And remember, IND AS applies to both standalone and consolidated. That's important.
Got it. And how do they calculate net worth for all these thresholds?
They use Section 257 of the Companies Act 2013. It's a specific formula. Pay attention to what's included and excluded. The initial cutoff was March 31st, 2014, and for those meeting the thresholds after that, IND AS kicks in the next financial year.
Oh, so they're not constantly recalculating net worth every year to see if they fall in or out.
No, there's a fixed point. And the module has these great illustrations, 1 through 7, showing you how these rules work in different scenarios.
Okay, so those are like mini case studies.
Exactly. Study those carefully. They'll help you nail those applicability questions.
Now, NBFCs are a whole other animal, right? Their roadmap is different.
Yeah, it starts later. Phase 1 from April 1st, 2018. Phase 2 from April 1st, 2019. Different net worth thresholds, too. And the group company rule applies, but with an exclusion for those already under the non-financial company roadmap.
Right. So we got to keep track of which entities fall under which roadmap.
Absolutely. And a big difference for NBFCs is that voluntary adoption is generally a no-go.
They got to wait until they meet those mandatory criteria.
Right. Their net worth cutoff is also different, March 31st, 2016. And that illustration 8 in the module that deals with NBFC parents and non-financial subsidiaries, that's a tricky one. They could definitely test that in the context of consolidation.
So if the parent's an NBFC using IND AS, the subsidiary might need to provide data based on the parent's policies, even if they wouldn't normally be using IND AS.
Exactly. It can get messy. Now, for banks and insurance companies, it's as per RBI and IRDA, which currently means not applicable.
Voluntary adoption's also out for them unless it's for consolidation by a parent.
Right. And mutual funds, SEBI made IND AS applicable from April 1st, 2023, with their own guidelines and formats. So each sector has its own quirks. It's a lot to keep track of.
It's like a choose-your-own-adventure for accounting standards.
Pretty much. But the module lays it all out, and those illustrations are super helpful for understanding the nuances.
Okay, so applicability roadmap, definitely got to study that carefully. Now, what about the legal side of things?
Oh, yeah. The Companies Act 2013 has a lot to say about IND AS.
But, like, where's the legal backing for all this?
Exactly. They mention specific sections, like Section 133, which gives the government the power to prescribe these standards in the first place, and Section 129, which requires companies to present a true and fair view and comply with those notified standards.
So it's not just good practice, it's the law.
Right. And then there's sections dealing with the director's responsibility statement, the auditor's report, mergers and arrangements, capital reductions.
So IND AS touches all these different areas of corporate governance and financial reporting.
Exactly. They might give you a question that links a specific IND AS principle to a provision in the Companies Act, like which section requires the auditor to comment on IND AS compliance.
So knowing those specific sections could be helpful.
Definitely. And don't forget about SEBI. They play a big role too, especially for listed companies.
Like with those formats for financial results and requiring IND AS in offer documents under the ICDR regulations.
Exactly. So the legal framework goes beyond just the Companies Act. Understanding SEBI's role is important, especially for questions about capital markets and lifting requirements.
Okay, got it. Now let's talk about how this all comes together in the financial statements.
That's where Division 2 to Schedule 3 of the Companies Act comes in. It lays out the format for IND AS financial statements.
So this is like the blueprint.
Exactly. Balance sheet, statement of changes in equity, statement of profit and loss, all laid out according to Schedule 3. It's been applicable since April 1st, 2014, with some later amendments.
But this doesn't apply to insurance, banking, or those NBFCs using IND AS, right? They have their own division.
Right, Division 3. But for most companies, it's Division 2. Knowing the structure of these statements is super important for the exam.
both for preparing solutions to problems and understanding how the information is presented.
Absolutely. And the module says we should also consider IPI's guidance note on Division 2.
Why? What's so special about that?
It clarifies a lot of the practical application of Schedule 3 under IND AS, like how to present land and building, what to do with capital advances, the details required for disclosing investments.
It's like the fine print, but for financial statements.
Pretty much. And those details are often where they'll try to trick you in exam questions. Like they might give you a scenario where you have to make an adjustment based on a specific clarification in the guidance note.
Okay, so those practical points can be tricky. What else does the guidance note clarify?
Oh, tons of stuff. Like the current portion of non-current items, how to treat bank overdrafts, current tax assets, even the definition of equity under IND AS Schedule 3 is clarified there.
And disclosure requirements for borrowings, trade payables, defaults, all that nitty-gritty stuff.
Exactly. The guidance note even gets into revenue recognition, that whole gross versus net thing, based on whether you're a principal or an agent. And it clarifies what they mean by exceptional items under IND AS 1.
So it's basically bridging the gap between the high-level principles of IND AS and the real-world application in those Schedule 3 statements.
Exactly. That's why it's so relevant for those application-based questions in the exam.
Okay, so as we wrap up this deep dive into the introduction to IND AS, I'm really seeing how approaching it from an exam perspective changes everything.
It's like a whole new level of understanding.
We covered the basics, why NDS came about, that whole convergence story, the implementation process, those detailed applicability rules, the legal side, and now the structure of the financial statements themselves.
And it's all connected. The history informs the current standards, the global movement explains why India chose convergence, and the detailed rules are how it all plays out in practice. It's not just memorizing facts, it's seeing the big picture.
Right, which is what they're going to be looking for in the exam.
Yeah.
Now, here's a final thought for you, and this is a big one. NDS is constantly evolving. IFRS is constantly being updated.
Oh yeah, it's a moving target.
So how crucial is it for you as a CA final aspirant to have a strategy for staying up to date on all those changes? What resources can you use to make sure your knowledge is current, not just for the exam, but for your future career?
It's essential, really. Continuous learning is key in this field. Those standards change, new interpretations come out, you got to stay on top of it.
Otherwise, you're stuck in the past.
Exactly. And there are tons of resources out there. ACCA publications, IFRS, website, professional journal.
So build that into your study plan.
Definitely. Make it a habit to check for updates regularly.
Awesome. Well, you've taken a big step today by really engaging with this module strategically. We hope this exam-focused deep dive has given you those aha moments and that extra edge you need.
Yeah, good luck with the rest of your studies.
Thanks for joining us on the deep dive.